Welcome back to the Daily Journal. So we will be reviewing my 10 a.m. continuation trade that followed on from the New York reversal with 10 a.m. red folder news on a Monday. So going into the day, this 2 a.m. continuation, I would have much preferred to have traded, as well as the 6 a.m. continuation, which I'll do in a Daily Journal video after this. So watch out for that. Those are more A+ setups for me. In fact, the 6 a.m. continuation was almost identical to the 2 a.m. continuation that we reviewed last week. It's actually pretty crazy. So keep an eye out for that. But yeah, to the point here, right? So let's just go back in time to read a bit of price action building up to this event. So the bias, right? This low was in fact taken out on ES, which gave me that bullish bias for when price traded into that new week opening gap. So going into 6 a.m., we'll drop down to the 15-minute for this. And let's just plot out our time verticals here. So there's the New York Open over here. News is just after that. So looking at price action pre-market, you can see we traded up. And there was SMT with ES over here. And that was kind of the basis for the 6 a.m. continuation trade, which I also would have preferred to have traded. But with 10 a.m. news, I'd taken the morning off. Also daylight savings. I'd spent the entire weekend reviewing October's trades, which side notes, I'm going to be doing a lot of Daily Journal videos for my A+ setups from the month. You know, I've only just started this series, and so I missed out on the opportunity to share those A+ setups with you guys. And that model I absolutely love. That A+ version of my model is just, it's I love to trade it. So I want to share that with you guys, and yeah, so watch out for that, because both the 2 a.m. and the 6 a.m. are A and A+ setups. Okay, so going into the session, watching price just trading straight up to this buy side liquidity. This was my initial drawn liquidity. Because this low had been taken out on ES, right? That's a previous day low. I'm expecting the previous day high, and from the opposing liquidity of this range. So this was the drawn liquidity, and going into the session, I was looking for potentially trading continuation to these highs. At least that was the initial idea. But of course, I checked the correlated pair, and ES hadn't taken it out. But when I looked at YM had in fact taken out the previous day high. Then we had the low time frame SMT. And so immediately my bias began to change. I still had this as a drawn liquidity. I was still open to seeing what the market would give me. And so with that bias kind of bearish coming to mind, I started looking at what the opposing liquidity would be, right? So if we have taken out the previous day high, what's the opposite liquidity? And so looking at the overnight session, you can see we had traded down into this new week opening gap, but we hadn't taken out that low, right? That's inducements. So we've now got a relatively good low sitting inside the new week opening gap. Okay, massive drawn liquidity. Secondly, we've now got relative good lows from the pre-market session, plus all these inefficiencies. So this is a market maker sell model in my mind. I'm just looking at this as, you know, manipulation. We're about to potentially shift, and if we do, I'm expecting distribution to take out the low resistance liquidity and all these inefficiencies and these relatively good lows. So going into that session, I can see the open immediately swept the pre-market high, and you can see these highs, there was massive SMT with YM. So we got your high time frame SMT, the low time frame SMT, plus, and this was the trigger for the entry, was a change in the state of delivery on the 15-minute chart. You'll recognize here, I don't go down to the 1 minute because there's absolutely no need to. Right, when we've got a volatile move like this, it's actually easier just to trade the 15-minute chart instead of dropping down to the 1 minute and looking for a predicted high. And then usually you get like a similar risk to reward, but the effort that it requires you is so much less when you're looking at the 15-minute charts. In fact, for a lot of my trades, if I can execute on the 15-minute charts, I will. It's A+ models, the only ones I really go down to the 1 minute. That's because I'm super comfortable. That's where my edge lies, more so than anything else. But here's the thing, with that change in the state delivery, look at the 4-hour candle. That's a reversal candle. So for me, it's as simple as entering on the next candle open because I'm looking for continuation, remember that. And down to these lows, I didn't have a 2-hour trade. So if I'd, typically that's where I would have looked to hit my stop, but that's only a, just over 1 hour trade. So just above the 0.5 of that fair value gap is where I was willing to get a trade. Otherwise, it was more like this. I went just, So came out to just over 2 hour. Sorry, this is actually, so it worked out, to about 2 hour, something like that, So, so basically entered on the open, and prices melted straight down to the drawn liquidity. And fortunately, I've learned to not go for the Pico bottom. I usually would just sit just below or just above. And that served me really well in my trading career. I promise you, because if I'd gone for that exact low, look at imagine what I would have to have sat through, If prices down here, you move your stop to break even, right? That's just a natural thing. I mean, price has gone all the way down, swept all this liquidity, you got really super highs above, you've got to put your stop at break even. And I would have got stopped out. And also I would have been invalidated. This was on an evaluation accounts. This wasn't an A+ setup, so it's not a live account for me. But this trade, even if I had to have held it with not moving my stop loss, it would have been automatically closed. You've got to close your trades before 3 or 4, whatever it is. So I'm usually not around that time. I'm sleeping by this point. So, and that's another point. This is 5 p.m. for me. So, 2-hour trade, bam, within 30 minutes, awesome, fantastic. And you can see here's the trade here with that trade there. So, that's a bit of experience talking there. So guys, that's the trade. And again, I'll be doing my daily journal video on just talking about the reflection of my model for this trade here, as well as this. And this, in fact, I couldn't believe how identical this was to the trade from just last week. I think Thursday or Friday. It was 2 a.m., not the 6 a.m. So watch out for that trade. But thanks for joining, guys. I'll see you in the next one. Cheers.